everyone and welcome to Counterpoints, the show unpacking the trends that are shaping our business. And today we will talk about gamification of the stock market. So I'm with Raphael Thuin, Head of Capital Market Strategies at Tikehau Capital. Hello, Raphael.
Hello, Annette.
So gamification of the economy has been an important trend over the past few years. And is gamification endangering public markets? That's our question today. So Raphael, for a couple years now, newcomers such as Robinhood, Box, Free Trade and many others have been entering the brokering market with gaming practices, paving the way to new investors. So shall we speak of a gamification of financial markets?
Yeah, in some ways the term is very right, and it's probably what we've seen elsewhere outside of financial markets too, throughout the economy. It all started, I would say, for financial markets in early 20s. You mentioned Robinhood, and rightfully so. Robinhood allowed a democratization of the access to financial market to retail investors with very low transaction costs, in a very fun way, notification, pop-ups, etc. So that was obviously a strong factor. The other factor was COVID. People were stuck at home, not capable of going out, spending, some excess saving also to invest, especially with all the stimulus checks that were sent to some people, especially in the US. And at the end of the day, well, you know what? Investing on the market is kind of fun. You're making bets. You're making money sometimes out of those bets. And it was clearly very well democratized. There was nothing else to do anyway at the time. And also it was fun to do it collectively. You would have forums where people were discussing some names, some investment ideas, and all of a sudden, all those excess volume, excess saving ended up being invested in the same names. And that has still today lasting impacts on the financial market.
Especially young people attracted?
Yes, looking at the breakdown, if you take the average account on Robinhood, the average investor is around 31 years old now. The median amount of money on the account is $250, so it's fairly small. It's mom and pops investing their life saving, and that obviously tells a lot about how retail this trend has become. Okay,
when you look at the Robinhood GameStop episode, are you worried that this will impact markets?
Yeah, we do see a lot of impact still to this day. It has started already. First of all, we can mention how now what retail is doing is clearly becoming increasingly a factor for investors. You need to know what is the next trend, what are those flows doing, where they are investing, and that is something which has become on the radar for a regular investor, I would say. So that's clearly a new impact. I would say also the other impact is the excessive usage of options to get exposed. Many of those investors not only invested their life savings, but they used options on top of that. So leverage, and obviously that has ramification in the market today. Looking at the amount of exposure gained through options versus stocks last year, for the first time in history, people got more exposed using options rather than stocks. So all is fine as long as the market goes up. But the day the market goes down, when you get margin calls and you have to put capital in front of it, this might be more problematic.
Okay, do you think that we need a regulatory framework? Are you on favor on this?
Yes, clearly regulation has a role to play. We can mention regulation in many ways. First of all, the way Robinhood and those platforms function brings some questions to the table. When you have pop-ups saying, hey, those are the most popular stocks on Robinhood, should we consider those pop-ups as investment recommendations? Unclear. When Robinhood offers to replicate the portfolio of a star manager out there, is it an investment recommendation as well? This is something where the regulator has to step in and clarify. I would also mention the fact that a lot of this activity also takes place on forums, the Reddit, the Wall Street Bets forum, etc., where people are ganging up and colliding around specific names To what extent is that market manipulation? That's also a question. And also, since it's a social platform, you have the same issues as you have with, for instance, Facebook or Twitter, you know, manipulation, bots being involved, foreign agents, hate speech, and that needs also additional regulation.
So do you think that market neophytes are at risk?
They are potentially at risk, and as long as stocks are going up and those bets are positive bets, everything's great. But the question is, what happens if tomorrow GameStop, AMC, Tesla, Bitcoin goes down and goes down hard? What will happen to those people? It's a question.
Exactly. So what is your recommendation then?
Well, I would start by noting that not everything's negative here. You have people starting to invest in the market, get educated, including online in the market, make money in the market, and many of those retail investors have made money through those bets, and that's something to be happy about. On the other hand, looking at in the negatives, indeed, remembering that when you play your investment, your life savings, well, those manipulation issues have to be tackled. And that brings back this notion that, yes, in the asset management industry, the fiduciary duty to work in their client's best interest has to also function in this kind of gamification of the markets.
Thank you. Thank you very much, Raphael, for sharing your insights, very interesting insights with us. I think it has been a great talk. And thank you for watching this new episode of Counterpoints, and hope to see you very soon for another episode. Bye-bye.